So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 pips rocking and rolling here, 21st of Feb 2020. No trade calls, no recommendations, are responsible for their own stuff here for educational purposes only. So, what's going on? Well, a few things to talk about here. And really, the focus is going to be on how we trade into the end of the week and the weekend. Of course, we'll have the update on Sunday, but I just wanted to talk about a couple of things we've been focusing on and just update on some trades. I mean, the situation, as we've been saying, we keep on going. The penny still has to drop with the whole coronavirus issue. And, things aren't really getting any better. Watch the situation in South Korea, watch the situation in Japan, watch the situation in Iran. And we'll discuss all these things in detail on Sunday, also with air traffic flow, et cetera, et cetera. Here, the focus again is the short term, right? And our base case here was really to look for, in this OPEX week, to look for strength into Thursday and Friday, and then sell the Thursday close, even though there have been tactical opportunities before, but sell that Thursday close for the Friday open, and then sell any strength to hold short over the weekend, right? Now, if you look at the ES, we're seeing a very, very nice pattern. Now, everybody's calling looking for what happened is the big thing is everybody's saying, okay, well, the economists called it, so that's it, the top is in, and we'll have to see if that is true or not. But as always, we're just going to focus on the levels. So on equities, what's going to be interesting here also is you see that the weekly is shaping up fairly negative too. So of course they could save this and close this positive, but our base case is still that this 34.04 is going to get defended, and that we're coming right back down. Now, what's interesting is also that we got the close here where they stick saved it into that 10-day moving average, and now that level is being sold. Very, very technical here. So what you want to see is, again, close below that 10-day today, ideally below those lows, and that would mean that we're moving back into the 3,300. And that's going to be the big pivotal level. We think that if we lose that 3,300, then we will see that 3,179 fairly quickly. And that's going to be the key to open up a bigger correction back into the 200 DMA. But for now, the focus is still on this kind of range, and we would not be surprised to see a lot of wheeling and dealing here. But remember, once the penny drops, then things could really accelerate quickly. And you saw how quickly the NASDAQ moved. A lot of people are not used to this, but once it goes no bid, you could really see a lot of aggressive selling. But you see the patterns are very constructive for the downside. You can see the action here on the ES. You can look at the NASDAQ, right? Very, very similar pattern. And also, if you're looking at some of the other markets like the DAX, which we've been talking about, very, very nice short on the DAX, which you see these failures on the 4-hour, and then bam, once it broke, it's really got going. And on the 4-hour, on the daily, again, it's really, really interesting, because you see how basically we've engulfed all this previous action, and right now we're back below this zone where we got that aggressive sell. So everything is pointing to the fact that as long as we can hold below this area, we're going to see a move back down, and we would expect this area to get tracked, right? The 13,000 area to get tagged. Now, also something we've been looking at a lot is also the Nikkei, right? And you can see the action here starting to roll over. The situation in Japan is, data was horrible, and our base case still remains no change from these failures here with stops above these highs. Our base case is that we're coming back into these lower levels. So again, you just have to be patient. Sometimes the best trade on the board is a trade you're already in. Speaking of trades we're already in, for the BND trade, this is fully in play. Again, we moved our TPs higher, and this is playing out quite nicely. And this is going to be very interesting to keep an eye out for, right? You can see, oops, pressed the wrong one. And now we'll look at it on the ZN trade. But you can see how this is really pressing, and as we discussed a lot, what's interesting here is everybody saying, this can't go lower, this can't go lower. But if you look at what happened in the Bund, etc., right, the velocity of move, once you break that 150 into the 1 and below 1 into the 0, can be very, very aggressive. So you have to be very, very cautious here if you're trying to counter trend this. We would not. We're still going with the trend here. But again, this is another one to watch that could really catch a lot of people off guard. And as we've been saying, not only for technical, fundamental reasons, but because of the context, the only trade really is, long gold, long bonds. That's the easiest expression of the trade we're already in. Then once the coronavirus started, then the no-brainer really is short copper, short Aussie, because it's very difficult. These are going to catch any kind of a bid, when the second largest economy in the world is effectively in lockdown. And if this situation gets worse, right, with South Korea, Iran, et cetera, you'll start to see the whole region is just going to be, there's just logistics is just going to be completely at a standstill, and those trades we've talked about are just going to continue to get traction. So again, here still looking for us to press higher, and as crazy as it may seem, right, because we traded some Bund to the short side, right, and as crazy as it may seem, as you remember, once we broke through this area, and I shocked myself too for saying that. I'd never expect myself to say that. It looks like we're going to try and go back into those silly levels on the Bund, but right now that's the only trade on the board right now. What else are we looking at? Some people were asking to remind or emailed in, what are the targets on gold? Where our target on gold is still hasn't really changed, is a move back into the 1659. Probably you'll start to see some kind of profit taking come into that 1650, the psychological level. But if we get a flush today, that's just going to go knife through butter, right? And upside targets, then you just look at all those psychological round numbers, right? 1650, 1700, 1750, etc. You get to a point where you get the flushes, it's really tricky to pick a level, because you just don't know how far it can go, especially if stuff starts to hit an air pocket. So what we usually discuss is when you see these Momo trades trying to get placed, what is the easiest thing to do? Well, the easiest thing is to just trail your stop behind the previous day close, because when the moves go silly, right, like downside moves or upside, the easiest way is to keep partial TPs where you want it to have them, right? So in this case, into the 1650s, but hold partial position, because you don't know how silly it can go. Just trail the previous day. So you have an open target and you don't know where it could go, how high it could go. So you're just waiting for the market to stop you out, right? And you're just trading previous day close. And this is also valid. And we look at this a lot in the weekly webinar, trailing the 1 hour close for shorter term moves, right? It's very, very similar kind of situation, right? And the same thing goes for the silver swing we're looking at. Again, silver to a certain extent is an industrial metal, so it's going to suffer a little bit more, but this trade is again completely in play. And at this point, a lot of people managed to get themselves risk-free on the trade, but our base case is still that these spike highs are going to get taken out and we're going to break out, and these are the bigger targets. So really not an awful lot has changed. Now, the other interesting dynamic we discussed yesterday is, are we going to get some kind of negative reinforcing loop with Trump and Sanders? Because think about it, right? If the higher so market is just saying, right, Trump is going to win, it's a lock against Sanders. But you're getting a situation where if Sanders, so basically let's do it this way, right? So if Sanders is going up, right, he's getting more and more traction. I still think they're going to cheat him out of the nomination, or they'll do whatever they can to. But if he's going higher, and at the same time, right, you've got a situation where the market is down, right, where the market is not doing that well. The market is going down. What is that going to mean? Well, in turn, that is likely going to mean that, Trump isn't looking so pretty with a market that's going down. So that could also mean that the odds of Trump getting reelected might slightly go down. And if the odds of Trump, right, going down, what would that mean? Well, that's likely that is reinforcing Sanders, right? So that means Sanders up again. And the more Sanders is looking to go up, well, you know what, right? Well, the market is going to go down. And the more the market goes down, well, the less chance Trump has of getting reelected. The less chance of Trump being reelected, well, the more chance of Sanders if he's the nominee, and the more chance of him is the market's going to go down even more, and then you get this negative vicious circle, right? So we'll have to see, but that's something to keep an eye out for. For now, I'd be a lot more focused on the ramifications of the penny having to drop with the real situation in Asia. Now, again, China and Iran, it's very hard because we know they lie and they're not really transparent with the truth. So we have no idea what's going on. What's going to be, don't even talk about Indonesia or stuff like that. But it's going to be a lot more interesting to follow developments in countries like Japan, which will be more open with the truth, because we'll get a much better understanding for what the numbers are really like. And that is going to be a key thing to watch. Now, the other thing is DXY, right? DXY, we're back into those highs, and it's going to be very interesting to see how we trade here, right? Again, I think this is starting to be an interesting fade. A lot of people wrote in and said, well, what's the plan with yen here? Well, there's no real plan for yen, right? We're not going to buy it on that rip higher, right? And if anything, I think now that it's settled, the interesting trade on yen is a fade, right? Now, why did the yen ramp up? Well, nobody really knows, but it's probably a combination of stops getting taken out, the situation in Japan being horrible in terms of the GDP that came out, and they keep on pressing the sales tax hike, which is crippling the economy. And on top of that, you've also got now fears of coronavirus. So that's kind of like a trifecta, and bam, you got a bunch of stops getting taken out, a lot of Momo strategies coming in, and you get that press back up. Remember what we said, as long as it's holding that 110.30, it makes sense to tactically try and get short and scalp, take 50 off and see if you can catch a little bit of a lottery ticket to the upside. Above 110.30, that 111 is going to come quick. Now, were we expecting 112 to come into play? Absolutely not, right? Not that quickly. But, it is what it is. But right now, if today equities turn down, right, and we get a little bit of a flush in the market, the tightest risk reward trade, right, and I've actually traded the smallest, right, the nicest play here is to get short yen, right? Is it a super high conviction trade? No, not really, but is it a trade that's interesting? Sure, right? Absolutely. If the market's going to turn down today, this is the tighter risk you've got, right? As soon as we break out of this area, that's it. You've got a trade on your hands, right? Short, stop above those highs, and you're looking for this to catch back down. Now, clearly you see here, you're starting to get bids trying to support this, and you'll probably get bids trying to support here. As long as the market is, inside a range, let alone if they buy it up and it rips higher. But even if it's down maybe 0.5% or something like that, it's not going to be a big deal. But if we get down 2 to 5% day on the market, well, there's a very good chance that this is going to come right back down and potentially completely unwind this move, right? So in a situation where, the risk reward is very, very interesting here if you think equities are going to roll, and if you don't already have a position on the equities, right? As I said, sometimes the best trade on the board may be a trade you already have. So if you're already short equities, you've got some of those trades we've been looking at, there's no need to pile on risk. And, because people think, oh, it's a different trade. Well, it's the same position, right? You think you have a different trade, but it's effectively, it's the same position. So if you're going to trade like that because you want to have more independent occurrences on, then it's much better to give yourself some kind of budget, right? So I want to be short this kind of nominal and then split that position on different ideas. Don't get carried away and on different ideas, which essentially are an expression of the same theme, right? Now, that's pretty much where we are. Let's see what we get. Again, I'll go into a lot more detail over the weekend in the weekend video. It was supposed to be a short update. I'm already through 15 minutes, so I'm going to shut up because I want to keep these short. Let me know if anybody has anything I haven't covered which you want me to cover on Sunday. Have a great day. Let's see what we get. All the best. Take care, guys. Bye-bye.